What is going on, guys, and welcome back to another very exciting video. In this video, we are going to be taking a look at PayPal, and PayPal is one of the most recent additions to my portfolio. So what I want to do in this video is I want to take a look at the good and the bad for PayPal over the last 6 months. I also want to dive into the economy. Where is the economy headed, and how is this going to affect PayPal and their earnings? And then finally, we will leave off the video by taking a look at the valuation on PayPal and really how it compares to the overall market. So if you enjoyed the video, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. Let's start off by taking a look at their stock chart. We can see here today that the stock has moved up around 2%. Over the last 5 days, up around 5.5%. Over the last month, it is up around 6.6%. And if we look year to date, the stock is actually down around 1.5%. And in 2023, PayPal has had a very interesting year. We can actually see that the stock through February actually ran up a fairly decent amount. It actually ran up around 17%. However, from there, it traded down into the 70 to 75 range and traded sideways for a few months. And then we got an earnings report that actually sent the stock lower, as there was some news that came out about the CEO retiring, as well as some issues with operating margin. However, since then, the stock has hit a bottom of around $60 and worked its way all the way back up to where it's sitting at now of around $73. At the start of the year, we saw that large run up from PayPal, and that was really fueled by a couple of things. The first being that analysts were looking at the stock in a very positive way. They saw the valuation that PayPal was commanding, how low it had gotten, and they were starting to raise their price targets as well as offer better guidance on PayPal. And overall, investors really love to see that because that drives more people to buy the company. The second thing that really drove PayPal stock up at the start of the year was the announcement that they would be laying off around 7% of their workforce, or 2,000 employees. And overall, we saw this from a number of companies last year where they announced that they were going to be laying off portions of their workforce. We saw from 2020 to around 2022 a lot of companies overhire, and those companies last year really went through a phase of starting to lay off some of their employees and really reduce their hiring. We saw this especially with a lot of big tech companies like Microsoft, as well as Meta and even Google. So a lot of these companies have really reacted in that way. PayPal was one to also do it, and investors really liked to see that because it showed a focus on really cost cutting and really leaning down of a business. In February, we actually saw PayPal start to pull back in their stock price, and a lot of that had to do with their earnings announcement. They announced relatively slow growth for PayPal. What they came in with was a total payment volume that increased 5% year over year to $357.4 million, and their revenue only rose by 7% to $7.4 billion. This was in line with what analysts expected. However, it was still relatively low growth for a company like PayPal. And in May, we saw the stock fall even further as they announced that they were expecting their operating margin expansion to be relatively weak for the year. And here we have the numbers that were announced. We could see that in Q1 of 2023, operating margin on a GAAP basis came in at 14.2%. For Q1 of 2022, operating margin came in at 11%. So we are seeing year-over-year growth in this number. However, it is not to the extent that investors were expecting. And what's really spooking investors is the competition that's coming into the marketplace and how that could affect PayPal's margin moving forward. We are seeing companies like Apple, Amazon, Google all get into the payment space, and that is a very competitive threat against PayPal's business that could have a long-term effect on their overall revenue growth, their EPS growth, and really their standing as a business. And that is spooking investors in a major way and has caused the stock to fall off. One thing that should help the stock price in the future is the repurchasing of shares by PayPal. They have increased their guidance from $4 billion to $5 billion in repurchases, and that could be a major step in the right direction for getting the stock price moving back up. And PayPal has done a great job of repurchasing shares of their stock as it has fallen. We can see that quarter over quarter, they have been reducing their outstanding shares by around 2.5%. Another thing that could have a huge impact on PayPal's business over the next year is interest rates. We saw inflation come in at 3% for this last month, and compared to a year ago of 9.1%, that is a massive change, and we are still headed in the right direction, which overall is a very good thing for the market, especially PayPal, because PayPal relies on consumers going out and spending money and using their platform. And if they can continue to increase their total payment volume, especially year over year get back to double-digit growth numbers, that is going to be a big catalyst for the stock price. And currently, PayPal is sitting at a fairly low valuation. Right now, it is trading at a 14.56 forward PE ratio. And if we look a year ago, it was trading around an 18 forward PE ratio. And when we compare that to the overall market, we could see that the S&P 500 is currently trading at a PE ratio of 26.18. So overall, PayPal is trading at a relatively low valuation. I do like to always confirm these valuations by using earnings estimates. So we can see that EPS estimates right now have an average for 2023 of $4.95, a low estimate of $4.78, and a high estimate of $5.06. So what we can do is we can plug those earnings estimates in against the current price of $73.49. And for the average estimate, we get 14.85 as the forward PE ratio. For the low estimate, we're sitting at 15.37. And for the high estimate, we are sitting at 14.52. So what that means is the forward PE ratio for PayPal right now of 14.56 is sitting towards the high end of analyst expectations on EPS. So with all of that said, personally, I do like PayPal for the long term. I own it in my portfolio and I'm hoping to actually buy more. What I really want to happen is I want the Activision Blizzard and Microsoft deal to actually go through so I can funnel that money into more PayPal shares. I think there's a lot of upside for PayPal. When you look at the business numbers, their revenue and their EPS numbers, which I've gone over in previous videos, they have experienced massive growth over the last 5 years. They are trading, I forget the exact number, like 75% higher in terms of their revenue from where they were at in 2018. And if we look at 2018, we can see that the stock price is currently sitting lower than where it was at. So that is absolutely insane that a business can have that much growth over a 5-year period and still be trading below that point. So I love this stock for the long term. I think there's a lot of upside left in it. I'd love to see it trade into the 100 to 120 range. That's where I kind of think it's sitting at in terms of a fair valuation. So that is all my opinion though. Keep in mind, do not buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. So with all of that said, I hope you enjoyed the video. If you did, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And as always, guys, have a wonderful rest of your day.